Welcome to the Deep Dive, the show where we slice through the information overload to bring you the clearest, most impactful insights. Today, we're diving headfirst into a sector that promises to reshape our world and maybe our portfolios too: autonomous driving. We're putting one of its most fascinating players, WeRide Inc., listed on NASDAQ as WRD, under our magnifying glass. Our mission: to arm you, the American investor, with everything you need to know about this high-growth, high-risk stock. Okay, let's unpack this.
That's right. We've dug through, well, quite a pile of the latest research and analysis reports to give you a clear, balanced picture of WeRide. Our goal is really to cut through the noise, deliver the essential nuggets of information that truly matter for your understanding of this complex company's investment potential.
Okay, so for listeners who might not be familiar, who is WeRide exactly, and what makes them stand out in this incredibly crowded and cutting-edge field?
Well, WeRide is truly a pioneer in autonomous driving. Founded relatively recently, back in February 2017, in Guangzhou, China. They moved fast, though. Went public on NASDAQ in October 2024. That quick path to listing, it signals some serious early progress and investor confidence.
Yeah, it's pretty quick.
Definitely. And they've gotten recognition, too. Fortune magazine put them on their 2023 Change the World list and named them one of the 2024 The Future 50 companies. So the industry is definitely watching. What really stands out to me is their global reach already. They're operating and testing vehicles in over 30 cities across 10 countries.
Wow, 30 cities, 10 countries. That is a serious footprint for a company founded in 2017.
Yeah.
But how are they actually deploying this tech? Is it just robo-taxis, or is there more to it?
Yeah, this is where it gets interesting. They have a really comprehensive approach. They call it their WeRide One platform. And it's not just software. It's like a foundational system that supports a surprisingly diverse portfolio of autonomous vehicles. So yes, there are the robotaxis. They've actually got those operating commercially in China and the UAE, one of the world's first to do that.
Okay, commercial operations already. That's significant.
It is. But then they also have robobuses. These are fully driverless, operating right now in Singapore. That's a Southeast Asian first for completely unmanned public transport. And it doesn't stop there. They're also developing robovans for autonomous logistics, deliveries, and even robo-sweepers, basically autonomous cleaning vehicles for cities.
Robo-sweepers. Okay, that's one I haven't heard much about.
Yeah.
So they're really diversifying.
Exactly. It feels like they're hedging their bets, right? They're not putting all their eggs in that very competitive robotaxi basket, which seems smart given the regulatory hurdles and uncertain adoption timelines. And maybe the most sort of immediate revenue play they have is their L2 plus ADS solution. They call it WePilot.
L2 plus ADS.
Right.
Can you break that down a bit? What does that actually mean for their business today?
Sure. L2 plus ADS stands for Advanced Driver Assistance Systems. Think of L2 plus as like really enhanced cruise control with steering help. The car handles some driving tasks, but, and this is key, the driver still needs to pay full attention, ready to take over. This WePilot system, it's mass producible, it doesn't need complex maps, and it's already in Sherry Exceed's Stera ES and ET models. So it gives them a way to make money now in the current car market, while their bigger L4 and L5 ambitions, full self-driving, mature. It's a smart bridge strategy.
A bridge strategy, got it. That makes sense. And I think I saw something about them working with Lenovo and NVIDIA.
Yes, exactly. That was back in July. They launched a 100% automotive-grade HPC 3.0 platform with them.
HPC. What's the significance of that for WeRide?
HPC is high-performance computing. It's basically the supercomputer brain inside the car. This platform means they're building the really robust computing power needed to handle the, frankly, incredible amount of processing for true autonomous driving. It's absolutely critical for their advanced stuff.
Okay, so they're involved in a lot of different, very advanced areas. A diverse portfolio, a bridge strategy with ADS. But let's talk money. When we look at a growth stage tech company like this, especially in such a capital-intensive field, the financials are always crucial. Given all this innovation, are they just burning through cash? What's the story there?
Yeah, that's the critical question for investors. You absolutely need to understand that WeRide is, textbook definition, a growth stage tech company. This means heavy, heavy investment in R&D. Planting seeds for the future, right? And the result is they're not profitable yet? Not even close. Let's look at the numbers. Their 2024 annual revenue was about 361 million Chinese yuan. That's roughly $49.5 million US. And that was actually down 10% year over year.
Down 10%.
Yeah. And Q1 2025 revenue, Around 72 million CNY, or just under $10 million US. That's almost a 50% drop compared to Q1 2024. It's worth noting that revenue actually peaked back in 2022, around 765 million CNY, before this decline started.
A declining revenue trend alongside all this expansion. Interesting. What about profit? Or, I guess, loss?
Right, loss is the word. Gross profit in 2024 was about 105 million CNY, maybe 50 million US, with a 30.7% margin, also declining. But the net income figure, it's a significant net loss, negative 2.5 billion CNY. That's about negative 345 million US dollars for 2024. And that loss actually increased by 27% compared to 2023.
A widening loss. Why? Where's the money going?
It's not surprising when you see the spending. R&D alone was almost 1.5 billion CNY, and then SG&A, selling, general, and admin costs, was another 1.6 billion CNY. Huge numbers. So their earnings per share for 2024 was negative $3.51, and cash flow, also negative. Operating cash flow was minus 594 million CNY, free cash flow minus 679 million CNY in 2024. It points to continuous cash burn. They clearly need more capital down the road.
That's
Yeah.
a pretty stark financial picture. So what does this all mean for an investor looking at a company that's, well, bleeding cash like that?
What it tells us really clearly is that WeRide is deep in the early commercialization phase. These huge losses, they're driven by the immense investment needed for this kind of cutting-edge tech. Autonomous driving R&D is just incredibly expensive. So for any investor, this is a primary risk. They need a lot of capital to keep the lights on and the research going. And there's just no clear timeline for profitability yet. It's, typical for companies in this hypergrowth pre-profit stage, but it absolutely signals a high-risk profile. No question.
High risk, definitely. It's easy to get bogged down in those financials, though.
Yeah.
But WeRide hasn't exactly been quiet. If you look at their recent news flow, there seems to be a different, more positive story emerging on the commercialization side. Here's where it gets really interesting. What's been happening lately that investors should know about?
Yes, absolutely. There's been a flurry of significant announcements, and they paint a picture of strong momentum in commercialization and global expansion. They're definitely validating their tech and their ability to execute. For instance, just very recently, July 28th, 2025, WeRide got the first robotaxi autonomous driving permit in Saudi Arabia.
Saudi Arabia, wow.
Yeah, and they immediately launched a pilot service in Riyadh, partnering with Uber and A-Driver. That's huge for global expansion, getting into the Middle East. And that Uber partnership, that's potentially massive for scale.
Okay, the Uber connection is big. What else?
Well, just before that, July 21st, they announced that collaboration with Lenovo and NVIDIA we mentioned, launching the automotive-grade HPC 3.0 platform. That strengthens their core tech, and it's crucial for future production and scaling up. Then July 17th, they started the first fully driverless Robobus operation in Southeast Asia. That's in Sentosa, Singapore.
Fully driverless, no safety driver.
Fully driverless. It's major proof of their full unmanned tech working in the real world. And it's a significant entry into the Southeast Asian market, which has enormous potential. And there's more. July 2nd, they got the first unmanned logistics vehicle test permit for their RoboVan W5 in Guangzhou. So progress on the delivery van front, too.
Okay, so permits and launches across different vehicle types and regions.
Right. And maybe one of the most impactful recent moves was back on May 21st. They announced a $100 million share buyback program. And alongside that, a plan to expand their robotaxi service to 15 cities. That's aggressive market expansion. And the buyback, that signals management's pretty confident in the company's underlying value. They're putting money where their mouth is to support the stock price. So yeah, taken together, it shows a company really shifting gears, moving fast from R&D to actual deployment on multiple global fronts.
It definitely sounds like they're pushing hard, aggressive expansion, new permits. But WeRide isn't doing this in a vacuum, right? The autonomous driving space is notoriously competitive. You've got some real giants playing here. How does WeRide actually stack up?
That's a critical point. How do they position themselves against the competition? Because you're right, it's fierce. You've got Waymo, backed by Google's massive resources, already running commercial services in places like Phoenix and San Francisco. They have a clear lead in commercial miles and data. Then there's Cruise, GM's outfit. They've had some pretty significant setbacks recently with safety issues, which honestly highlights the risks for everyone in this space.
Right, the Cruise situation was a big deal.
Huge. And in China, their home market, Baidu's Apollo platform, is dominant with its Apollo Go service. Plus, they have strong government backing. And you can't forget Mobileye, the Intel company. They're a leader in ADAS chips and software, kind of tackling it from the component side.
So against those giants, what's WeRide's angle? What makes them different?
They seem to be carving out their niche with a few key advantages. First, as we've talked about, that diversified product portfolio. It's not just robo-taxes, robo-bisses, robo-vins, even robo-sweepers. That spreads the risk, opens more potential revenue streams later on. They're not betting the farm on just one application.
Diversification makes sense.
Second, their aggressive global expansion. Moving beyond China so early into the Middle East, Southeast Asia, that's a bold move that could lock up market share before others get there in force. Third, that mass-producible ADAS solution, WePilot. It's a practical way to generate revenue now from the existing auto market while the fully autonomous tech develops. It bridges the gap. And finally, I'd say their pioneer spirit. They seem really focused on getting those first-ever unmanned permits globally. It shows they can navigate complex regulations and execute operationally.
Okay, so diversification, global reach, ADS now, and regulatory wins.
Exactly. But let's be clear, the challenges are still massive. Funding compared to Waymo. It's David versus Goliath, data scale. Waymo and Baidu likely have much more, and just general brand awareness outside China is probably still quite low.
Right, so let's tie this back to the investment side again. We talked about the losses. What do the actual investment metrics tell us about WeRide, especially for you, the American investor, looking at this?
The metrics scream growth stock and honestly high-risk investment. Let's break it down. As of, say, late July 2025, their market cap was hovering around $2.94 billion. PE ratio, price to earnings, negative. Of course, they have no earnings yet. But the PS ratio, price to sales, is where it gets really eye-popping. It was around 58.91 on a trailing 12-month basis.
58.91. Whoa. Can you quickly unhack what a PS ratio is for folks and why that number is so high?
Sure thing. The PS ratio basically divides the company's total market value by its total sales over the past year. So a ratio of almost 59 means for every dollar in sales WeRide generated in the last year, investors were willing to pay nearly $59 for a piece of the company stock. For a typical established company, that number might be, 2 or 3, maybe 5 for a solid tech company. 59 is astronomical. It tells you the market isn't valuing current sales at all. It's pricing in expectations of massive future growth. It's all about potential. Very common for these kinds of high-grow, pre-profit tech stocks.
Okay, so the market's betting big on the future. What else?
Their enterprise value is around $13.5 billion. That's actually down significantly from a peak of over $87 billion in 2024, showing just how volatile this sector and this stock has been. On a positive note, their current ratio is really high, like 13.6. That indicates strong short-term liquidity. They have plenty of current assets to cover near-term debts, which is good given the cash burn. But the bottom line from these metrics, traditional valuation doesn't apply here. It's all about future potential being priced in today.
Analyst sentiment seems to agree. There were 2 analysts covering it with buy readings. Their average 12-month price target was $22. That's suggesting like over 100% upside from current levels.
Over 100% potential upside, but based purely on future hopes.
Pretty much. And it's not just retail investors hoping. You see significant institutional interest. Big names like Carlyle Group, Mirai Asset, even NVIDIA Core are holding shares. That signals some serious belief in the long-term story from sophisticated players.
Interesting. Okay, high expectations, high potential upside. But we keep coming back to the risks. Let's really focus on the potential downsides now. What are the biggest risks an American investor absolutely must consider before touching WeRide? Lay it out for us.
Okay, let's be blunt about the risks. They are significant. Number 1, persistent large losses and uncertain profitability. We've hit this already, but it's crucial. They're burning cash, costs are high, and nobody knows when or even if they'll reach profitability. Number 2, high capital needs and potential share dilution. This industry just eats capital. They will likely need more funding rounds. That often means issuing more stock, which dilutes the value for existing shareholders.
Right, dilution is always a concern with growth stocks needing cash.
Definitely. Number 3, intense competition. It's a war of capital, as some call it. They're up against giants like Waymo and Baidu with incredibly deep pockets, competing for market share, for talent. It's brutal. Number 4, regulatory and legal uncertainty. This is huge. The rules for self-driving cars are still being written, and they vary wildly between countries, even cities. It's a massive hurdle for expansion and just getting services running legally.
Yeah, the regulatory landscape seems like a minefield.
It really is. Number 5, commercialization and market adoption uncertainty. We just don't know how quickly people or businesses will actually adopt this technology on a large scale. Will the business models even generate enough revenue? Big question marks there. Number 6, being a China-based company brings specific China-related risks. Think U.S.-China geopolitical tensions, potential crackdowns, or new regulations from the Chinese government that could impact operations, data sharing, maybe even their U.S. listing. And finally, number 7, talent acquisition and retention. Finding and keeping top-tier AI and engineering talent in this field is incredibly competitive and absolutely essential for them to keep innovating. Losing key people could be a major setback.
Okay, that's a sobering list of risks. Important to keep those front and center. Let's shift gears slightly. For investors who track charts, what's the recent price action telling us? A quick technical glimpse of WRD stock.
Sure. Looking at the chart, the stock price, around $10.40 as of late July 2025, has been extremely volatile. It saw a long, painful downtrend after its IPO in October 2024. The 52-week range tells the story. High of $44, low of just over $6, big swings. However, more recently, there's been a noticeable short-term rebound, like that 7% plus jump on July 28th we saw. That seems directly tied to the positive news flow we discussed, the Saudi permit, the partnerships.
So the news is actually moving the needle short term.
It seems so, and importantly, the trading volume picked up significantly alongside that positive news. Increased volume on up days generally suggests stronger conviction behind the move, more investor interest. Now, looking at technical indicators, things like the RSI, the Relative Strength Index, might be showing it's getting a bit overbought in the very short term.
Overbought, meaning it might be due for a little pullback.
Potentially, yeah. RSI measures the speed and change of price movements. When it gets high, like maybe above 70, it suggests the buying might have gotten a bit ahead of itself and a consolidation or pullback could happen. On the other hand, you might see indicators like the MACD that's moving average divergence showing a bullish crossover. That happens when a shorter-term moving average crosses above a longer-term one, and it can signal a positive shift in momentum, maybe the start of a new uptrend. But, and this is critical, while the recent news provides momentum, the upcoming Q2 earnings report, I think it's July 31st, that's going to be a major test. It could really determine if this rebound has legs for a sustained long-term trend change.
Got it. So technicals are showing some recent positive signs, but maybe getting stretched short term, and earnings are the next big catalyst. Okay, beyond the market, beyond the numbers, let's talk about the company itself. What about WeRide's internal strengths? What capabilities do they have that might actually drive future success, despite the risks?
This is where you see the potential shine through, I think. Internally, they have some real strengths. First off, human resources and expertise. The company was founded by key people who came from Baidu's Apollo project, including the CEO, Tony Han. Serious pedigree in this space. They have over 1,000 employees, a lot of them focused on R&D, and their safety record is actually quite impressive. Over 2,000 days of accident-free operations on public roads, 0 reported regulatory violations. That speaks volumes about their engineering and operational discipline.
2,000 days accident-free. That's definitely a strong point in this industry.
Absolutely. Then there are their strong R&D capabilities. They're not just talking about level 4 autonomy, they're commercializing it. Getting those fully unmanned permits globally is a massive technical and regulatory achievement. That HPC 3.0 platform with Lenovo and NVIDIA shows they can integrate complex, powerful systems. And they leverage a ton of data they mentioned over 1 million hours to train their AI models. That's key for refining performance, making the driving feel smooth and human-like.
So strong tech, strong safety culture. What about strategy and execution?
That's another key strength, I'd say. Their aggressive management strategy and execution. They're not just sitting in the lab. They're actively commercializing multiple services, taxis, buses, vans, and pushing hard on global expansion, Middle East, Southeast Asia. That takes drive. Their strategic partnerships are smart too. Uber, Sherry, Yutong, a big bus maker, Lenovo, NVIDIA. These create synergies, help them scale faster than they could alone. And that $100 million share buyback we mentioned, that's a management team showing confidence, signaling they think the stock is undervalued. It's a strong internal message. Finally, I'd point to their agile corporate culture. They seem able to enter new markets relatively quickly and cost-effectively using local partnerships. That suggests some real organizational efficiency, which is crucial when you're burning cash like they are.
Okay, so putting it all together, the tech, the losses, the recent news, the competition, the internal strengths. What's the final synthesis? What does this all mean for you, the American investor looking at WRD?
Okay, let's synthesize. WeRide is undeniably a high-potential innovator. They're right at the forefront of this mobility revolution with a diverse product pipeline, a bold global strategy, and proven fully unmanned tech. The recent flood of positive news definitely builds momentum and validates their capabilities, no doubt about it. But the inescapable conclusion is this. WeRide is a classic high-risk, high-reward growth stock, period. If you're considering investing here, you need deep conviction in their technology and their long-term vision. And, crucially, you need a genuine tolerance for significant financial risk, operational hurdles, and stock price volatility.
High risk, high reward. Got it. Any specific actionable advice for listeners tracking this?
Yeah, a few key things to watch closely. First, monitor those profitability trends. That upcoming Q2 2025 earnings release on July 31st is critical. Look for any signs of revenue starting to recover, or maybe the losses starting to narrow, even slightly. Second, track their commercialization progress. Don't just look at announcements, look for evidence of actual revenue generation and scaling of services in these new markets like Saudi Arabia and Singapore. Are they actually making money from these deployments yet? Third, keep a very close eye on the competition and the regulations. What are Waymo and Baidu doing? Are there new rules coming out that could help or hinder WeRide? This landscape changes fast. And finally, given that cash burn, try to understand their funding plans. Are they talking about needing more capital soon? How might that impact existing shareholders through dilution? Stay alert to that.
Excellent points. Monitor financials, track real-world traction, watch competitors and regulators, and understand future funding needs. This deep dive into WeRide really underscores the just immense potential of autonomous driving, but also the stark realities. Where WeRide fits is fascinating. It really is a delicate balance, isn't it? Incredible technological promise weighed against very real financial and market risks. Definitely not a stock for the faint of heart.
It really brings up a fundamental question for this whole industry. In this race to build truly autonomous transportation, what ultimately matters more? Is it early commercialization and having diverse products like WeRide? Or is it just having the most capital and the biggest mountain of data, like maybe a Waymo? WeRide is basically testing that theory in real time. It's going to be absolutely fascinating to watch how it plays out for them.
A great question to ponder. How much does diversification and early mover advantage matter against sheer scale and data? We'll be watching. There's so much to consider as this entire space evolves. If this deep dive was helpful, please subscribe. We'll be back soon with another deep dive into the topics that matter to you.